Hey guys, thanks for hanging out with me today. I love sitting here sharing with you, chatting with you, learning more about you. Go ahead, comment down below who you are, where you're from. I love meeting you and sharing with you. What if I told you to get started on investing and change your entire future? $100 is all you need? Most people think that it takes far more than $100 to change your life, to change your financial outcome, to really have any kind of impact. But it simply isn't true. And if you've been taught that you need thousands of dollars or millions of dollars to completely change your entire financial outcome, you've been lied to. It's pretty much that simple. You've been lied to. So I'd like to share with you how $100 can completely change your future. First off, just so you know, we are talking about investing, and you can start investing with only $100. It's actually possible. See, the trick here isn't to start with millions of dollars or even thousands of dollars, but small little amounts make a huge difference. $100 working for you, $100 in an investment will make you money. So that money growing at 10% is huge over time. And 10% really is not a whole lot of growth. You can achieve far better than a 10% growth on that $100. But also there's consistency over time. So say you start with $100, you've saved up $100, you put that into investment and it starts to grow. Well, maybe you come across another $5, $15, whatever it is, you can add that to your 100 and it will continue to grow as you put more in it. And then all of that will continue to grow at the growth rate of your investment. So if your investments are growing by 10%, you put $100 in, that grows by 10%. You put another 5 in, that also grows by 10%. You put another 15 in, that grows by 10%. And now all of a sudden you've got this ball of money that continues to grow at 10%, 15%, 20% or better. So just by putting little bits in at a time, you really change your financial picture. So let's talk about this. So first, you have to pick a place to do this. Now, I personally use Charles Schwab. I have an investment account there. You open an investment account. You can do this at any broker. There's so many of them out there. I personally use Schwab, and you simply transfer $100 to Schwab. And then later on, maybe 5, maybe 10, maybe this week you only got $2. That's fine. Just transfer it over there and put it in your investment account. That's step one. It's really simple. Just pick a place to open an investment account and go ahead and open that investment account. Now, I would lean towards opening a standard investment account, which gives you some freedom and flexibility in what you can do with the investments. You could also open it as an IRA or a Roth IRA, and these will give you some tax advantages, but the money really won't be usable until retirement age. Think like age 65 or older in most cases. And you'll have to check based on your age and your retirement parameters where that is. But overall, the simplest way to get started is to just open a standard investment account. And from here, you can put in your $100 and then over time, maybe add a few dollars here, a few dollars there, and it will continue to grow. That's step one. The next step is to pick your first investment. So you've got $100 to invest. There's so many different things that you can invest in. There's things called bonds. What a bond is essentially a loan, usually to a government, and they usually use these loans to build bridges or schools. You hear, like when you're voting, that you have to vote on a government bond. Do you approve of this bond? Well, what that is the government is asking for permission to get a loan to do a project. So when you invest in a bond, you are investing in that. You are one of the many people who are issuing the money for that loan, and then as that loan gets paid off, you get interest on that money. So you can buy and sell your bonds. You're not stuck to it forever. So you can buy into a bond that's out there, and then as it pays interest, essentially you get money as it pays interest. And then if this bond isn't giving you the amount of money you're hoping for or growing the way you want it to, you just sell your share of the bond and somebody else will become an investor in that bond. There's also things called mutual funds. Mutual funds are a great place for beginner investors. So what a mutual fund is think of it this way. There's one guy who manages investments. So all this money gets pooled in. You buy this mutual fund, that's like a company, we'll call it, called a mutual fund. And you buy into it, and he takes that money and invest it. Now, this is not a financial advisor, that's different. But he's got a pool of money from a lot of people who have bought in. So he's buying stocks and other investments, and it's growing. And it's gaining at 10, 15, 20% in returns for you. So that is another way to do it. These are generally very safe because he's got it diversified is what it's called. So he's bought multiple investments. So even if one investment fails, he hasn't lost all of your money. So mutual funds are a great way to go, and mutual funds are rated in a lot of different places. So I suggest if you look at mutual funds that you look for ones that have 4 and 5-star ratings. Because there's so many of them and they grow at such a good rate, you don't need to invest in one that has below a 4-star rating. There's no point. Just invest in the best at this point with mutual funds. And like I said, these are pretty safe, and then you can take your $100, you can split it, $50 in one fund, $50 in another, so you are starting to diversify. So if one mutual fund should fail, which most likely won't happen, but if it should, you've got a little bit of safety here where you're not losing all of your money. And then the next common thing is stocks. Well, stocks, what those are pieces of a company. You can be an investor in a company. So let's just think like a major company like GE, and there's so many smaller companies too, but GE is out there. And investors own GE. Well, you can be one of those investors by buying some stocks in GE. And mutual funds and stocks trade very much the same way. You buy and sell them. If it's not growing the way you want it to, you simply sell it, and somebody else buys your shares out, and they become an investor in that mutual fund or in that stock. And you can research stocks at most brokers. They've got stock research tools and mutual fund research tools, so you can research different stocks and different mutual funds. So I encourage you to look at this. What I would encourage you to be careful with is to not buy a stock or a mutual fund just because you've heard about it on the news or from a friend, because a lot of times the hype can change its perceived value and people buy in and they don't get the returns they expected. So I really suggest that you use the research tools at your brokerage company like Schwab or TD Ameritrade or one of these companies. I suggest you do your own research to see if it looks like it will grow the way you want it to, and you purchase it. And then don't worry day to day how it's doing. Worry about how it's doing maybe every other week or once a month, and see if it's growing at the rate you would like it to grow. And if not, you sell it and then buy another investment. It's not a big deal to trade them out as often as you like, but if you do it too frequently, like every day, you're really not gaining the value, because you're just trading on hype. And that's when you might lose, because every day a stock will go up a little, down a little. It's not a big deal. But over time, over 2 weeks and over a month, it should be growing. And if it's not growing over the course of a month, or not growing fast enough for you over the course of a month, that is the good time to sell it. So really be careful about the hype. But when you build these investments and keep investing your money, it really makes your money start working for you. You are gaining value on your money for really doing no work. You're just buying a portion of a company or a portion of a mutual fund where it is growing based on the value of the companies and how these companies are doing. So by you just having a little bit of discipline to put a little money there and buy that investment, it's already just growing for you without you having to put in the effort of doing the physical work of making the company grow. And this is absolutely a game changer for your financial future. Now, by having a little bit of discipline, by continuing to put in $5, $10, $50, when you come across a few extra dollars, it allows you to continue investing in that account. And now some stocks are also very expensive. So what they allow on a lot of well-known companies is what's called fractional shares. So let's just say there's a stock that trades at $200, but you don't have $200. Don't worry. A lot of brokerage houses will allow you to do what's called a fractional share. So you tell it you have $50 or $100 to buy this stock, and it will give you a piece of a stock. Essentially, you're sharing a little piece of a stock instead of an entire stock all by itself. And this is an easy way for you to buy some of those more valuable companies without having to have large amounts of money up front. So a $100 stock, maybe you only have that $25. Well, you can put $25 in it and you have, if it were a $100 stock, you'd actually have a quarter of a share. And that quarter of a share will still grow at the same rate as a full share will. So if the full share is growing at 10%, your quarter of a share will also grow at 10%. Whatever you've invested will always grow at the rate that stock grows at. So this is another great way to invest. If you don't have enough money up front for a full share of a stock that you like, you can buy fractional shares in thousands of stocks. Not every single stock out there offers fractional shares, but many of them do. So you don't have to worry about having thousands of dollars or even hundreds of dollars. $100 is plenty to get started with. And I know that you can be a little bit disciplined and save up $100 to get started. One of the keys here is to actually get started. One reason we don't get started is maybe we don't have the $100 right now, so we give up already. Don't give up. Don't do that. That's silly. You're destroying your financial future, or at least not improving your financial future by doing that. Go ahead and save $100. If you have to, literally take the money and put it in a cookie jar until you have $100 and then invest it. That investment will pay off huge for you in the future. It really will. Just little bits added to that over time, with it growing at a steady rate, is going to pay off really well. Think 5 years from now, how much money you might have if you start investing, versus if you don't invest 5 years from now, you will be no better off. So it's worth trying. Trust me, you'll thank me in 5 years when you see how much money you've been able to save and how much money you've been able to grow based on your investments. Hey, if you've got any questions, I would love to hear those. Go ahead and write those down below and let me know what you think about fractional shares or even trading some mutual funds. I look forward to seeing you in the next video.